Right. Good morning, everyone, and welcome to another session of Bright Talks with Sun Life Asset Management. My name is John, and I'm a business development officer from Sun Life. So this morning, we will be kickstarting our Fund in Focus series for 2021. Before we begin, allow me to introduce our company. Sun Life Asset Management Company Inc. or SLAMC is a wholly owned subsidiary of Sun Life of Canada, Philippines. As the investment arm of Sun Life in the Philippines, we are committed to be every Filipino's partner in their pursuit of prosperity. SLAMC has been advocating for financial prosperity since the year 2000 through advice, wealth solutions, and service. Being the largest non-bank asset management company, we manage 16 mutual funds with 150 billion assets under management. The Sun Life Prosperity Funds are available through around 2,500 mutual fund advisors, 10 bank partners, 4 broker partners, and 1 direct online channel. Slumsy's fund suite invests in different assets from short-term treasury notes and time deposits to government corporate and government issued bonds, and of course the stock market. Our wide array of funds allow investors of all types to choose the one that is best suited for their goals and needs. Stocks are also called equity. So those interested in investing in the stock market may consider equity funds. Today, we will be talking about the two main type of equity funds, a traditional equity fund and an index fund. To help us differentiate between the two, we are also joined by my colleague, Lurcy Cuenca. So Lurcy is a business development officer with Sun Life. She's a licensed mutual fund advisor and representative and is SLAMC's account manager for several key partners. So good morning, Lurcy. I hope all is well. So before we begin, I guess we could start before we actually get into it, perhaps we could start with something with some defining of terms first. So like an index. What is an index exactly?
Hello, good morning, John, and to all the attendees of this webinar. So, John, you're asking about what is an index. So,
Correct.
Investopedia had it defined for us. So, an index is an indicator or measure of something. So, in finance, it typically refers to a statistical measure of change in a securities market. So, in the case of financial markets, stock, and bond, market indices consist of a hypothetical portfolio of securities representing a particular market or a segment of it. So in finance and investing, John, there are different kinds of indices. So you have indices for bonds, you also have indices for equities. And locally, the most common stock index is the Philippine Stock Exchange Index. And the Philippine Stock Exchange Index, or as finance practitioners call it, the PSEI or PSE, PSE or PCOM, is a stock market index of the Philippine Stock Exchange consisting of 30 local companies. So the weights of each of the stocks is different, which
Mm.
considers liquidity, meaning the number of shares that the stocks are traded every day, and market capitalization. So the PSEI is the benchmark of the performance of the Philippine stock market. And in investing, you'll hear benchmark a lot, John. No? You'd hear fund managers say that their fund is outperforming its benchmark. And basically, a benchmark is a standard or measure that can be used to analyze the allocation, the risk or return of a given portfolio. And again, in the case of the Philippine stock market, the benchmark, right, is the PSE. And for other countries, they also have their stock market indices. Like for US, they have S&P 500, the Dow Jones Industrial Average or NASDAQ. For Japan, they have Nikkei 225. For South Korea, they have the Kospi Index. And for Australia, they have ASX 200. And for the audience, for those who are really very new to hear about PSE, you can go to pse.com.ph, and you can get more information about the PSEI from their website. So in here also you can see the opening price, the intraday price, and the closing price of the PSEI. So this screenshot I got last week. This was for Friday last week, and the closing price of the PSEI is at 6,786.62. It is down by 33.91 points, or negative 0.50%. So that's just how you read the
Mhm.
figures posted on PSE's website. And also on the same website, you can check out the list of the 30 companies in the index. So most of these names you already know for sure. We have Ayala, BDO, San Miguel, Jollibee. And also, just to note, these stocks are coming from different sectors. Like, for instance, we have the industrial sector. So we have Meralco for that. We have property sector. We have Mega World for that. For services, we have ICT. For holdings, we have Ayala Corporation. And then we have the banks like BDO, BPI, and Metro Bank for financial. And for mining and oil, we have Semirara. So this just shows that we have a lot of sectors comprising the PSEI. And again, the weights of each stock in the PSEI is different. This considers liquidity, meaning the number of shares that the stocks are traded every day, and the market capitalization.
All right. So that's a great explanation, Lucy. So in finance, you mentioned that an index is usually like a list of companies, a diverse set of companies, and it is set or predetermined by a particular institution, like
Correct. Mm-hmm.
Philippine Stock Exchange.
Mm-hmm.
And it is used actually by some as like a high level test or a litmus as to how the performance of a specific market is. Say for
Mm-hmm.
the Philippines, if you look at the Philippine Stock Exchange Index, if it's up,
Mm-hmm.
then one could say that the general economy of the Philippines is growing. And then if
Mm-hmm.
it's also down, then one could say that the general economy of the Philippines in that particular
That
time is
is correct.
also
Mm-hmm.
declining. So now that we understand what an index is, may we please get into what an index fund is?
So, John, an index fund, it is a type of mutual fund with a portfolio constructed to match or track the components of a financial market index, such as the PSEI. So, it is also said to provide a lot of benefits for the investors, such as broad market exposure, low operating expenses, and low portfolio turnover. So, these funds follow their benchmark index regardless of the state of the market. So in the case of the PSEI, it is the index fund is of course expected to be up if the market is up. So if the market is down, the index fund is also expected to be down. And for here in Sun Life, we have this index tracker fund. It is the Sun Life Prosperity Philippine Stock Index Fund. And this fund aims to track the performance of the PSEI, and this fund invests in the 30 blue chip companies which compose the PSEI. And what I am showing here is the fund fact sheet of the Philippine Stock Index Fund. And this can be downloaded from sunlifefunds.com for the information of our audience. So we update this document monthly, and it is also uploaded so that you will know what is it in the fund for this month. So this document shows the weights of the equity holdings in the index fund. And another thing to add is that the fund is passively managed. So that means the fund manager doesn't have any active calls into it. And the objective of this index fund is to mirror, mimic, and track the performance of the PSEI. As you can see here on the left part of the fund fact sheet, you have here the top equity holdings of the fund. And these are also the companies that you'll see on the PSEI. So whatever the weight of those companies in the PSEI, that should also be the weight of those equity holdings in this fund. And John, this fund is
Mm-mm.
really very popular to the clients, especially to those who are beginners in investing in the stock market, because for just a minimum amount of 1,000, they are already
Mm.
invested. So that's really the fund is really a no-brainer, and it's also very low cost.
Yeah. Aside from actually the low investment cost, I would think that one would a client may actually be interested in that fund because of the relatively ease of monitoring, right? Because these indexes are usually in the front page of business newspapers. They're also the first ones to be discussed in any business news. So if you are watching the news and say you are invested in the Philippine Stock Exchange Index, and someone the anchor says the index is up, then you would know that your investment is also up. And adversely, if they shared that the index is down for that day, then you would also think that hey, my index investments are might be down for the day, right? So you mentioned earlier about how the index fund is passively managed, and
Yes. Mm.
um it kind of just goes actually with the flow. It doesn't try to reject or make active shots against the market to outperform it. um
Yes. Mm.
can you care to further elaborate on this? Is there an others actually it's now in the screen. Is there an actively managed fund?
Yes, John. So as we mentioned, index fund is a passively managed fund, and in this management style, the fund manager attempts to mimic a benchmark. So in the case of the index fund, the benchmark is the PSEI. So the portfolio is created to track the returns of a particular index as closely as possible. And you also mentioned about active management. So in this type of management, the fund manager actively picks investments. They make the investment decisions for the fund and pay close attention to market trends, shifts in the economy, and factors that might affect stocks. So actually, SLAMC has funds for both management style. For the passively managed fund, again, we have the index fund for that. While for the actively managed, we have the Sun Life Prosperity Philippine Equity Fund. So this is another fund for our audience who might be interested to expose their investments in the stock market. So this in the Philippine Equity Fund, the top equity holdings are almost the same with the index fund, but you will notice a slight difference in the weight of the equity holdings. So the weights of are the percentage in figures now shown beside the equity name here on the left side of the fund fact sheet. And again, this fund is an actively managed fund, and it implements the enhanced indexing strategy. So this means that the fund can adjust the exposure to a particular stock. The weight can be increased or reduced to up to 5%. And the team responsible for the management of this fund studies the trends in the market, they analyze economic data, and stays current on company news. And with this research, the addition or reduction of weights for each particular stock is applied. And also, aside from the adjustment in those weights, the fund may also invest in second liners or those companies outside the PSEI, because we know that there can be also opportunities for the fund outside
Mm-mm.
of those companies in the PSEI. And John, let me just further explain the enhanced indexing strategy for our audience. So on this table, on the left, you'll see the top equity holdings of the index fund. And you'll also see here the equity weight. So this just shows how much of our funds are exposed to that particular stock. So for this, in the first example for SM Investments Corporation, the index fund is 16.6% of index fund is exposed to this particular stock for SM investments, while for equity fund, that's 13.68%. So we can say that for this stock, our equity fund is underweight, no? Because as we mentioned, the equity fund can add or reduce exposure. For the second example, if you take a look at Ayala Corporation, in index fund, that's 6.56%, while in equity fund, that's 8.02%. So that just means that the equity fund is overweight in Ayala Corporation. And for the last example, for BDO Unibank, it's 6.17% in index fund, while in equity fund, that's 5.56%. So for this stock, the equity fund is underweight. So this is just to show the audience or our clients how enhanced indexing strategy is applied, no, in the stocks
Mm-hmm.
where the equity fund is invested in. And aside from that, also again, the equity fund can invest in second liners or companies which are not included in the PSEI.
Got it. So got it. Thank you for that explanation, Lucy. So basically, an index fund, it is passively managed, and a traditional or plain vanilla equity fund, the investment manager has more hand, right?
Mm-hmm.
So if they say they according to their research, then this
Mm-hmm.
company is about to take off, they may increase their weight there or their allocation of
Mm-hmm.
funds there, so that to try and maximize return for the fund. And
Mm-hmm.
on the contrast, if they see, let's say, according to their research, a particular company is going to
Mm-hmm.
suffer a bad month in the short term or ahead, they may also move the funds away so that it could be avoided. For the index fund, it doesn't care, right?
Yes, correct.
It cares more for the tracking. Actually, it's marked, I would say, more for how accurate it tracks the index. So the
Mm-hmm.
more it deviates from the index, it could be said that it's not a good index fund. And one could actually say that an outperforming index is not
Mm-hmm.
could not be a good index because of the tracking error. um
Mm-hmm.
Okay, so it seems like good funds, no, both are invested again in the stock market. So those who are interested in investing in the stock market and don't want to
Mm-hmm.
do it themselves, may want to be taking the opportunity of putting their money in a fund where it's managed by a professional fund
Yes.
manager.
Mm-hmm.
So aside from this, what would you say are the benefits of investing in either an index or an equity fund?
There are a lot of benefits, John, but let me just highlight a few. First would be, of course, diversification, because if you invest in these funds, you're automatically invested in the 30 biggest public companies in the Philippines. So
Hmm.
this means you have instant diversification in terms of stock holding. So if you want exposure in the equities market, you should start investing in an index or equity fund. Second would be, of course, is low cost, because for mutual fund companies like the index or equity fund, you may start investing for only 1,000 pesos, and the minimum subsequent amount is also 1,000 pesos, and that
Hmm.
1,000 pesos is again diversified already into those 30 companies. Third would be this one's for index fund. It's simple and easy to monitor. So the level of the PSEI, it is usually published in newspapers and business news. So since index fund just aims to track the performance of the PSEI, if you read that PSEI is up by 1%, you should expect your investment to also be up by approximately 1% also. And what's also noteworthy for equity fund is, of course, the professional management, because we have the team for that who scans the market daily and who's always on the lookout for opportunities that they can bring to the fund.
Right. So diversified, low cost, and simple and easy to monitor. And imagine, right, for as low as just 1,000 pesos, you could own a part, like a part of any of the top companies in the Philippines. I actually, this is just a small anecdote. I remember when I first invested in an index fund, I told myself my brothers, when we visited Jollibee, I said I actually own a small part of the Jollibee, maybe the disposable fork. But that was just a small joke. But technically, you are a part owner of those companies, right? So I guess I'm thinking our listeners today are already actually considering that maybe this is a good investment for their particular fund. Sorry, for their particular goal. I might They might be considering either an index or an equity fund. So um, are there other considerations that one must think about on whether before they actually jump the gun, right, and start investing or opening an account or topping up if they're already an existing client, adding more to their index fund accounts?
Of course, John, in deciding to put your money in any type of investment vehicle, you should first know about your investor profile. So first, you have to know your investment horizon, or the total length of time that an
Mm-mm.
investor expects to hold a security or a portfolio. Second, of course, your risk appetite, or the amount of risk you are willing to accept to achieve your objectives. And another thing to know is your financial situation, of course, because in these types of investment that are exposed in stocks, you should be able to keep your money for a long time in these funds. And for the audience, it is recommended that you have an emergency fund first before investing in equity laced funds, so that you
Mm-mm.
will avoid redeeming from your index or equity funds when an emergency arises. So for these two funds, these are the index and equity funds are more on the higher risk spectrum and for long-term investment.
Right. So I think that's actually that encapsulates it, right? All the considerations that one must actually think about first.
Mm-hmm.
Number one is the index or the equity fund are ideal for long-term investors because
Mm-hmm.
um traditionally the equities are very volatile, meaning they go really up, or when they go down they go really down, but over the long term they outperform most asset classes. That's
Mm-hmm.
traditional knowledge that we have. However, one should also consider their risk profile, as you mentioned. Are they an aggressive investor? Can they actually take the volatility that is in the market? Let's say
Mm-hmm.
what happens to your heart? Are you still able to sleep if the market actually goes down, right? And number three, and I think a lot of people have realized this, especially with what we are experiencing now.
Mm-hmm.
What is your your personal financial situation? Do you have enough funds to take care of yourself just in case an emergency happens? And I'm
Mm-hmm.
sure we've been discussing the emergency funds in our other sessions, like our
Mm-hmm.
financial planning sessions. And most people I know are familiar with this, especially with what the world is experiencing now. So again, given this, I really think that our investors are already I mean, might be considering investing, right, uh in the index fund. Aside from those, what would you say is the type of investor that is suited most for the index fund?
So considering all that, John, the index or equity fund is suited for an investor who has a long-term investment
Mm-mm.
horizon, who can accept high levels of volatility, and who is a passive investor. So
Mm-mm.
as I have mentioned, the investor should have a long-term investment horizon, right? And
Mm-mm.
the investments are recommended to be dedicated for long-term goals. So here we are just showing some examples of those long-term goals where they can dedicate their investment in the index or equity fund. First, of course, would be comfortable retirement. So I know, John, you have been investing in the index or equity fund since you started in Sun Life. And when I asked you before, you said that's for your retirement. And I said, wow, that's too early, John. But yes, we really encourage the audience to do that as early as now. You start planning for your retirement, even if it's 15 to 20 years away. So second would be purchasing a house. So this is an example. And I have a friend who actually invested in the equity fund in the past 10 years, and he was able to buy a small parcel of land with the proceeds of his investment. And the third example, this is popular among our colleagues, John, no?
Mm-mm.
Investing in the equity fund for their children's college education fund. So what our colleagues do is that they set aside a portion of their salary every month. So their bank accounts are enrolled in bills payment facility, and this automatically deducts a portion of their salary every month, and that goes directly to the index or equity fund. And in time when the need arises not to use the fund for education of their children, they
Mm-mm.
can redeem from their funds. So
Mm-mm.
these examples show how you can be goal based when it comes to investing. So this is also how Sun Life would like to advocate investing. Goal based investing means that your investments should be aligned to take care of your goals when they
Mm-mm.
are due.
Mm-mm.
So also, I've said that the investor should be able to accept high levels of volatility. And that is because stocks or equity investments are considered the riskiest among the major asset classes. But also, they offer the greatest potential for high returns. And investors of these funds, like the index or equity, should be able to willingly accept that risk. Why? Because if your risk appetite doesn't match the product that you're investing in, you might just panic and sell at the wrong time. And
Mm-mm.
here, I am just showing the chart of the PSEI in the past 10 years. And you can see that the market is really volatile. It has its ups and downs, of course, because stock prices rise and fall due to many factors. So, like for instance, the PSEI crashed to an 8-year low last year in March, right? So, this was when the lockdown was imposed. It pushed the stock market down to the 4,600 level. And the last time that this happened was in 2012. But during that time, it was a bullish market back then. So if you are a short term investor and your decisions are emotionally driven, when you see that your portfolio shows negative returns, you might feel compelled or you might feel compelled to redeem your investments or
Mm-mm.
reduce your exposure or even sell your shares. But if you are an informed investor with a long term investment outlook, you will understand that these volatilities are just, part of the game, and you will stay the course in order not to compromise a portfolio's long term return potential. So that's why we are telling our clients to stay the course or have a long-term investment outlook so
Mm-mm.
that even through market declines, they'll see the bigger picture, no, that they'll be able to buy additional prices at additional shares at lower prices, and they see opportunities that presents itself as a chance to increase their portfolio to benefit from long-term growth.
Right, right. Um, a little note, Lucy, I think we're actually showing the 20 year. We started from the year 2000
All right,
in the
yes.
graph.
Mm-hmm.
And it's good that we are really emphasizing long-term investing, right? Because here in this graph, you would see well, personally I would recognize that I would think the two most famous drops in the market.
Mm-hmm.
It's the
Yes.
2008 financial crisis, and also what we're experiencing now, which is the COVID pandemic, right? And this is actually related to what we mentioned earlier, that equities or the stocks traditionally they really go up and down.
Mm-hmm.
Well, historically, when they go down, they really go down. But when they go up, they're also they it also goes up, right? But over the long term, the trend really is upward. And I think it was very good that it was also mentioned that
Mm-hmm.
the goals that are traditionally viewed as long-term goals, right? Like let's say sending your kids to college. Let's say you have a baby, a
Mm-hmm.
newborn baby. That's at least 18 years, right?
Mm-hmm.
Or buying a house. Buying a house is a substantial investment, so it's not really uh easy for someone to get that capital for the normal folks right away. And then lastly is retirement, because especially if you're young, then you have a lot of time to actually start for saving for your retirement. So these things, these goals are what could be someone, if someone is trying to invest for these goals and they have a long time horizon, then they could definitely consider the index or the equity fund. So let's say someone is trying to get married kaya next year, Lucy. Is it, would you say it's, is it a wise decision to put the money in the index?
We would not recommend that
Not
person or to,
recommend.
yes, of course, because again we said these types of
Right,
investments are for long-term goals, and
right,
if it's
oo.
next year, that's not for index or equity
Yeah.
fund.
Imagine if they invested in 2020 no, tapos hindi matutuloy yung kasal, Lucy.
Yes, that's
Kawawa
correct, John.
naman. Right. So hopefully those getting into the index really have a long-term time horizon. We cannot stress that enough. So I would think that our listeners are already has a good grasp or a good knowledge of the
Mm-hmm.
equity fund and the index fund, and they might be considering to actually invest. But
Mm-hmm.
given actually the volatility, the ups and downs that we are seeing, I think some of our listeners are also wondering, is it a good time now to invest in the index or an equity fund? Should I wait it out first, or is there a particular strategy that you would like to share? Are there any magic formulas? Technically it's still August. It's the last day of August, and there is also this concept called the August, right? Or the like August, or like every time that it's August, the stock market actually goes down, so no one should actually buy during the August. Do you have any comments about this? Care to share?
So, John, you mentioned about the August month, and this has been
Yeah.
also asked by a lot of our clients, no, during
Mm-mm.
the start of the month. And here, let me just show you a heat map which displays the month-on-month performance of the PSEI from the year 2010 to 2020. So, I don't
Mm-mm.
intend to confuse our audience, John, with this heat map. So, let me first explain how to interpret this. So on the top portion of the heat map, you'll see the months from January to December. And on the left side, those are the years from 2010 up to year 2020.
Mm-mm.
And in those boxes are the month-on-month returns
Mm-mm.
shown in percentage of the PSEI. So if the box is green, that means the PSEI closed on a higher level than when than the start of the month. So that means positive 1 month return.
Mm-mm.
And if the box is red, it means negative 1 month return. The PSEI closed on a lower level than when the month started. So
Mm-mm.
let us just focus on the month of August because this is what the investors are asking. No, is it really the worst month for the stock
Mm-mm.
market? So while it is true that majority of the months of August in the past 10 years returned negatively on a 1 month basis, you see a lot of red boxes, right? But
Mm-mm.
there are also some months that it returned positive. And actually, if you take a look at the 10-year average return on the top, that's indicated below the months,
Mm-mm.
you'll see that the month with the highest average loss is actually not August, but November.
November.
Yes.
Mm-mm.
But
The
John,
ghosts are in November pala.
yes, might be because it's Halloween
Halloween.
November, right?
But
But
that's just a
John,
joke.
we don't want our
Yeah, yeah.
clients to focus on this. We don't want them to look into what
Correct.
months would possibly turn red or green,
Mm-mm.
but we want them to take a look at the bigger picture. No, when investors would say that the August is a scary month to invest because the market will probably decline.
Mm-mm.
But if they are an informed investor, they will consider this like a sale in the mall when the stock prices can be bought at cheaper levels, and that the sale will allow you to enter, put more or cost average.
Correct.
So if the mall has a 3-day sale, you can
Mm-mm.
consider this period as a 1 month sale in the stock market. But John, actually for this year, it's quite unique, no? Being in the new normal.
Mm-mm.
For this month, well, we are in the last day of the month, the market seems to be ending on a positive note because we started the month at 6,400 level, and now we are back to the 6,700 level. And that just means we rebounded during this month. And those are contributed by several factors, some of which would be the positive earnings report of some of
Mm-mm.
the companies in the PSEI, the
Mm-mm.
lifting of the ECQ to NECQ in NCR, and
Mm-mm.
the news that NCR is now close to herd immunity. But of course, yesterday we have the Philippines recorded the new highest single day case count, which is at 22,000 new cases. So later this afternoon, let's see how the market will be affected by this news. Let's see later
Mm-mm.
how the market will close for August.
Mm-mm.
And what I want the audience to focus on would be how the funds have performed so far in the past year for the index and equity fund. And for index fund, it has returned 14.69% on a 1 year basis, while for equity fund, it has returned 13.78%. For year-to-date performance, this is from the start of the year until Friday last week, the index fund has returned negative 4.48%,
Mm-mm.
while equity fund has returned negative 2.73%. So on a 1 year basis, you can see that the PSEI is recovering from last year because definitely, despite the risk, we are in a much better place than last year. And the audience might be asking why the equity fund performed better on a year-to-date basis. It's just negative 2.73% versus negative 4 of index fund. And again, this is to highlight that the equity fund is an actively managed fund. So
Mm-mm.
the outperformance is contributed by the active calls of the fund manager. So that explains the good performance of the equity fund. And the audience might also be asking, why are we still on the negative? Our year-to-date returns are still negative. Well, that's because we started the year strong at
Mm-mm.
7,300 level, but there were some bad news and some poor market fundamentals. This clouded investor sentiment. So the PSEI struggled. But the audience might be asking, what should we do when the market declines? What should we do when the market corrects? So, our recommendation for you is to take this as an opportunity to enter at current levels, or for existing investors, even to add more. You might be asking why? Because, of course, after each crisis, of course, there is recovery. And last year, of course, we've seen several opportunities for you to enter. Here we are showing the PSEI, the performance from last year until this month. And you can see here that it has reached the 4,000 and 5,000 levels last year. It's
Mm-mm.
like several times that the PSEI went on sale, right? For example, in March 1, 2020, in March 2020, it reached the bottom of 4,623. But just last Friday, we again the market again rebounded back to the 6,700 level. So imagine if you have invested during the time in March 2022 when everyone feared entering the market, no, your investment would have returned almost 48%. And for everyone in this webinar, if you missed last year's market dip, the current levels present an opportunity for you to enter or take it as a chance to add more, because definitely the current levels around 6,700 is a good entry level for long-term investors. So at this point, what we would like to ask our audience is that, will you wait for things to get better before you invest? Or would you rather invest now while we are still on the still recovering, while the market is still on sale and the prices are still down? Because if you take a look at a bigger picture, the market correction presents itself as an opportunity for a long-term upside. And if you are deciding to invest in the PSEI now, we can say that you are investing in the recovery story of the Philippines.
Yeah.
And as we have said, we are currently in the 6,700 levels, but the audience might be asking, what can help drive the market to rally again for the remainder of the year or until next year? Well, we can cite some factors that can be market drivers. So first would be, of course, more vaccine supplies and faster rollouts. This is the most important catalyst for the year. And here we're just sharing the post of DOH from their official Facebook page. It says here that as of August 15, 27.8 million doses were already administered. And if you take a look at the lower portion of the image, it says that the average daily administered doses in the last 7 days is 475,304. And this is already close to government's target, which is around 500 to 700 doses daily.
Mm-mm.
And actually, we are expecting to receive more vaccine supplies. As a matter of fact, the Philippines is expecting 148 million doses of vaccine arrival for the remainder of 2021. And one of the major contributors to PSEI rebounding even to 6,800 level last week is the news that 43% of eligible population in Metro Manila complete two COVID-19 jabs. So Philippines is one of those countries where majority of economic activity is centered into a region. So with this news of NCR's recovery, it is really
Mm-mm.
important for the market to rally, right?
Yeah.
So with the numbers of vaccine arrivals seen, analysts project that the Philippines can achieve herd immunity by mid to end of next year. And of course, achieving herd immunity is necessary to allow reopening of more economic activities in the Philippines. And this, of course, will lead to uh, another market driver, that is the eventual ease of NCR MECQ into GCQ, more stronger corporate earnings for the companies in the PSEI, and of course, the return of foreign investors to the PSEI. So those are the market drivers which we believe will help the PSEI to recover and contribute opportunities to the index and equity funds. So I hope our audience will find value in investing in both of the funds, and these funds will be included in our clients' portfolio very soon.
Yeah, right, Larcy. Thank you for that update. No, and we do hope sincerely that things start to pick up for the Philippines now with this bits of good news. I guess to also share what we're to also summarize, we really don't recommend our clients to try and time the market, as we've seen through the heat map chart through August and November. Those could actually just be coincidence for the last few years, but maybe if perhaps we dive a little deeper, that might not be the case. I think one of the things that an investor should first learn when getting into the market is nothing is guaranteed, right? If someone tells you this is guaranteed, then um turn away. Turn your run from that person, because that might not be the safest person to trust, no. So uh again, we go back to the what we've been emphasizing for the entire webinar, is that you could try considering, when you invest, make sure that you have a long-term time horizon, and that you do not try and time the market, and also consider the different investing strategies, like the peso cost averaging, wherein you just put small amounts of money over the regular basis, and over the long term you will just ride the market high um and even lows, right? So we are now at the tail end of our conversation session this morning. We just have a few learning session checks. I hope that most of you will get this correctly, and then we will go and move on to our Q&A portion. So we have a couple Q&A questions. Rather, we have a few questions in our Q&A pod, and those who are still interested in sharing the questions, please don't hesitate to share them. For now, we will just have a three poll questions to serve as a learning check now. So we will be launching this and be giving you a few seconds, maybe a minute to answer it. So the question number one is, how many companies are listed in the Philippine Stock Exchange Index? Oops, I think I accidentally ended the poll. Oh, hmm. Poll ended. How do you relaunch poll? Okay, I'll try and relaunch the poll. There, ayan. So, learning check. Question number one. How many companies are listed in the Philippine Stock Exchange Index? And so a few answers are already coming in. And then the learning check question number two. Equity funds are traditionally considered as long-term investment instrument. Is this true or is this false? There. And our last question, our last learning check question is, um, the stock market is guaranteed to go down every August. True or false? Okay, so we'll give you five more answers. Around 50% of the audience have already answered. Okay, five, four, three, two, and one. There. Okay, so we're sharing the results. Okay, so for question number one, how many companies are listed in the Philippine Stock Exchange? Majority of you got it right. 86% answered 30, and that's actually the correct answer. So before we get into the question number two, again a reminder: if you have questions, please type them in the Q&A pod so that we can answer them after this segment. Okay, so question number two, equity funds are traditionally considered as long-term investment instruments. True or false? I think we couldn't emphasize this enough. True. 96% of you got it right. And number three, the stock market is guaranteed to go down every August. And 88% answered false, and actually that is the correct. So if you remember in the graph earlier showed by Lucy, we are actually in the green for this year, I think, because we were coming from a low base actually. So nothing again is guaranteed, no, in investing or even in life. Ayan. So just to give you some key takeaways and a summary of what has been discussed earlier, an index fund is a predetermined list. Sorry, an index fund invests in a predetermined list set by a financial institution, which is usually an exchange. It is passively managed, meaning that it fully accepts the flow of the market and it does not try to take any steps to outperform the market. In fact, an outperforming index may be considered bad due to tracking error. Technically, the best index funds are those that do not deviate from the market. Uh, on the other hand, a traditional equity fund allows fund managers to take measures to try and beat the market. Strategies such as enhanced indexing may be implemented. So, despite its differences, both an index and a traditional equity fund are considered volatile investment vehicles suited for clients with higher risk profiles and longer time horizon. So, Sun Life's own index and equity fund have an initial additional investment of 1,000 pesos. So for those of you who are not yet a client and are wanting to or considering in investing in an index fund, or those of you who are already existing clients and are now considering in adding to their current accounts, we have our digital platforms for you. So now that we have more clarity on these two funds, you may be considering again starting your own fund since we are living in these uncertain times where our family's health and safety are of utmost importance. We would like to encourage all of you to take advantage of our various digital platforms. So feel free to take a photo of the slide here so that you can save all the links that can help you in your digital investment journey. So these online platforms are available to both new Sun Life asset management clients as well as existing investors. So we'll be showing a short video on how you may conveniently open an account online, and then after which we'll be proceeding to the Q&A. Okay?
Want to start investing in the Sun Life Prosperity Funds? It takes only a few steps. Go to www.sunlifefunds.com to know the different types of mutual funds available. When you find the mutual fund that fits you best, click Buy Now. Accomplish the online application page. Upload a clear photo of a valid government ID with signature. Read the terms and conditions. Click Agree to accept. Review your order details. Select the mode of payment. That's it. Easy, right? A confirmation of your subscription will be sent via SMS or email. Congratulations! You're now officially a Sun Life Prosperity Funds investor.
All right. So indeed, investing in mutual funds using the MF online app is as easy as one, two, three. So let's now proceed to the last part of our webinar. Let me call on Lucy again to help us answer the few remaining questions in the Q&A pod. I think some of the questions were already answered by our colleagues who are also in the room with us. But I guess, Lucy, to start, we have this first question. I want to invest in the stock market. Should I invest in a mutual fund or buy stocks directly? So what can you say to this question?
Actually, John, it's really possible to invest directly in the stock market. No, for that attendee who asked, you can really invest directly into those 30 companies and follow the weights in the TSEI. But
Mm-mm.
if you choose to invest in a mutual fund, no, I would want to highlight some of the features. So first would be the affordability, because for just 1,000 pesos, your investment is already diversified into
Mm.
those 30 companies. Whereas
Correct.
if you would like to directly invest in the stock market and would want exposure into all those 30 companies, you would need at least 100,000 of pesos for you to be able to do that. Second would be, of course, the this is for the equity fund, the
Mm-mm.
professional management, because there is a team which is who is responsible to oversee the fund and to
Mm-mm.
be on the lookout for possible opportunities that can bring upside to the fund. And for those who are full-time employees like us, John, we don't
Yeah.
have the benefit of time to scan the market, and
Yeah.
that would make the equity fund as a better alternative, right, than directly
Correct.
investing in the stock market.
Mm-mm. And as you mentioned, right, stocks would actually have board lots. So depending on the stock that you chose, let's say stocks like PLDT would have at least well, the last time I remember around 2000. So if you would want to invest there, then you would need, more substantial money. And there's also this thing called the 8,000 peso rule in the stock
Mm,
market, wherein
yes.
if you would want to maximize the fees that you are actually paying, either your broker or the taxes,
Mm-hmm.
um ideally at least you are putting in at least 8,000 peso every time.
Mm-hmm.
So and that could just be one stock, right? So at least with an index fund, it's already diversified, or with an equity fund or any mutual fund for that matter, it's already
Mm-hmm.
diversified across different markets. And if you really, again, as you mentioned in the latter part, you don't have time, diba? You don't want to worry about it, you can just outsource it to a professional fund manager. I have a question here. This is a popular question, especially these days. No, actually, earlier someone asked me if I was playing Axie Infinity. What is your opinion about cryptocurrency? So our fund managers are aware of the cryptocurrency. However, Sun Life actually doesn't invest in it, or nor do we have funds that invest in it. Why? Because we are still doing, our fund managers are still doing research. It's a relatively new investment outlet. So there are a lot of uncertainties that are attached to it. No? So an institution like Sun Life, which has a very long history, actually 125 plus years in the Philippines, um, it um prioritizes longevity, right? So not yet right now, but our fund managers are aware of it. And should there be any updates to that, should if ever down the line, right? We don't know. We have a fund that tries to invest there. We'll make sure that our clients will know about it. Okay, so I have another question here, Lucy, maybe more for you. If an index and equity, if index or equity are for the long term, which fund allocation is better for the short term?
So if that client would be looking for a fund for short term, so we wouldn't really recommend the index and equity. Instead, we will recommend our other funds. No, actually in SLAMC, we also have funds which are suited for investors who are more conservative and has a short term investment horizon. For that client who asked, maybe he should check out the money market fund and our bond funds also. So those products are more suited for a shorter term investment horizon.
Mm-mm. Okay, thank you for that, Lucy. I have another question here, and perhaps I can take this. Can an OFW for the mutual fund apply for a mutual fund? He is still in California. However, sadly, unfortunately, we are required by our regulator to ensure that our clients are currently in the Philippines when they are investing. So if you, or if you are still an OFW and you are outside of the Philippines right now, um, we highly encourage you that when you get back to the country, you try and open the account while you are still here, because right now we are required again to only open accounts for Filipinos currently in the Philippines, or actually even other nationalities, but as long as they are in the Philippines. Okay, there. So another question, Lucy. The since equity fund is actively managed, does this mean that the fund manage, or the fund manager fees are higher than the index? So ilang percent po ang difference? So how much ang difference po ba ng fees?
Okay. Yes, equity fund is actively managed, so there is a management fee, involved in the fund, and that is, of course, we are that is how we pay for the professional management of the fund managers. So for equity fund, that is a 2% management fee, while
Mm-mm.
for index fund, that is a 1% management fee, and that is because, of course, index fund is passively managed. There is no active management involved, and also that means lower no I mean less buying and selling of stocks. So um as for me, I didn't really take a look at the, or even consider the management cost, no, when I started investing, because I am really after the professional management of the fund, that is equity fund, and I am really happy right now with the returns of in my portfolio, as I have
Mm-mm.
seen year to date, the equity fund is outperforming the index fund. And for some of the existing investors here, no, of the equity fund, please take a look at your portfolios also. The equity fund outperformed the benchmark, and that is basically because of the active calls of the fund
Mm-mm.
manager. The active calls provide downside protection during bearish markets, like what we have now.
Okay. Thank you, Laricina. So I think I'll be, so that we can answer more questions, I'll be combining some of this a bit related to what you answered just earlier. Are there hidden charges in investing in MFs? And another question, personally, which do you prefer between the two? May bias ka ba sa between index or the equity fund?
Is that for me, John? Yes.
Maybe
All
I
right.
can take the first part and then
All
you
right.
can
Sure.
the second part. So
Sure.
in terms of hidden charges, well, there are actually no hidden charges, but sadly, some people are actually not aware of most, no. But Sun Life as a company, and even our financial advisors, we are required to give prospectuses to our clients. And what Lucy mentioned earlier, the fun fact sheets, which are downloadable in our website, actually also lists the fees that we have. So what are the fees that come with mutual fund? There are several. Number one is the management fee. So this is the fee that is paid to the investment manager. We also have custodian fees, which are also paid to our custodian banks. And then there are other fees like documentary stamps and even taxes. However, as a mutual fund investor, actually, we have this number called NAVs, or net asset value per share. And we discussed this more in detail in our mutual funds 101 session, wherein uh, NAVs actually stands for net asset value per share, meaning it's already net of everything. So when a return is quoted, it's actually already net of fees. No, so unlike other instruments where withholding tax would still be applied after the gain, quoted index fund. Sorry, quoted mutual fund returns are already net of fees. Okay, so I think going back to you, Ollers, you personally, which would you say is your preference? And by the way, you can also choose your own questions if you have any that you would like to answer.
Okay, so yes, we saw the question, is it better to invest in local or global index fund? So for me, no,
Mm-hmm.
if you have the chance to be invested in both, we would recommend to invest in both local and global. That is
Mm-hmm.
because, of course, it is better to be diversified. If you are invested in the local PSEI, you would be investing in value. So we know that PSEI is the valuations are currently more at more cheaper. So it seems like you're investing in the recovery story of the Philippines. While for if you're invested in a global index fund, you are diversifying into the many sectors which are not currently available in the PSEI. So for example, you are investing in the healthcare sector, you are also investing in technology sector, and these are the companies which are always being asked by informed investors nowadays. We notice more investors asking what funds are would be exposed in the Pfizer, Moderna, AstraZeneca, what funds are exposed in Apple, in Microsoft. So it really if you really have the chance to invest in global, go for it. And we also have the products here in Sun Life, which are invested in global index funds. So that's it. Invest in both global and in local index funds.
Mm-mm. Thank you, Larissy. So I think in the interest of time, we'd be answering around three more questions. I'd like to answer the last no, but anyway, the phrasing naman was personally. Personally, do you prefer index fund or the equity fund? Ako personally, I prefer the index fund actually. Number one, it's actually I shared it earlier. It's easier for me to monitor the index fund because I don't even have to look at my statement of accounts. I just look at the news. If the uh PSEI is up, then I would know that my investments would be also up. And if the PSEI is also down, then I would have an idea that my investments are also down. And also, traditionally, index funds would actually have lower fees over actively managed funds.
Mhm.
So that's just a personal preference of mine. I prefer investing in the index fund. So this is a question for you, Lucy. Maybe last question for you. Um, okay, so this is how much an election question. How much would election spending contribute to improvement of our PSEI for the balance of the year, or do we expect this election spending to impact our PSEI at all?
Well, we've seen in the news that analysts are saying that economic recovery may accelerate shortly before the 2022 elections, and that's basically to be contributed by government spending. And
Mm.
of course, especially on the infrastructure side, there will be a lot of spending a few months before the national polls, so as not to violate the election spending ban, right? And because there is heavy spending, of course, this can
Mm.
contribute to stronger corporate earnings. And that would, of course, impact the PSEI positively. And just to share with you, considering these factors also, the elections, SLAMC is expecting, or the PSEI forecast for next year is around
Mm.
7,900, and that means that if you enter current at the current levels, that is around 6,700. That is around more than 15% upside, right?
Mm.
So
Mm.
that's
Right.
yes.
Okay. Thank you for that, Lucy. I guess this is our last question in the interest of time.
Mhm.
If index and equity are for long term, so which fund allocation is better for short term allocation? So this is a great, I think, last question for us because we would actually like to invite you to our next events, no? So okay, so on September 14, we have a scheduled MF 101 or Mutual Funds 101 webinar. You can register there through bit.ly/MF101 September 14. So in the MF101, just in case you are not yet too familiar with the concept of mutual funds and would also like to brush up on your financial planning basics, you could definitely consider registering for our MF101 so that you would actually know, how mutual funds work, 'di ba? What the NAVs are, which we mentioned earlier, building emergency funds and those things, no. And then this is actually more related to the question earlier naman. Our next Fund in Focus session is on September 28th, 2021, and you can register for it in bit.ly/fund FIF dash September 28th. So here we'd be discussing the Peso Starter Fund and the Dollar Starter Fund. So the Peso Starter Fund is actually recently renamed, or going to be recently renamed from the Sun Life Money Market Fund. So related to the question earlier, if the index fund is or the equity funds are for the longer, more aggressive investors, this is actually the other side of the spectrum, no. So our Peso Starter Fund, that's why it's called Peso Starter. This is actually ideally where you would start if you are starting from nowhere, from zero, no. So ideally you could invest in this conservative funds. These are short-term funds, and we will be discussing more about this in our next session in Bright Talk again on September 28th. Will also be we hope that you could also be attending that. Okay, and that will be at from 2 o'clock to 3 p.m. All right. Um, so actually that's it. We would love to hear from you. Please scan to evaluate and receive the recording link. No? So please share your feedback with us. If there are other topics that you would like us to discuss, you can also share it in the feedback session. If you scan this link, or when you close the webinar, it should be showing up in your screen now. So uh we also have a portion there where you can show us your comments on the MF Online app, and we will do our best to work on it and to make sure that our services are more improved. So that's actually it for today. Thank you everyone for joining us, and I would also like to thank Lucy for spending time with us earlier and helping explain the difference between the index fund and an equity fund. And we hope that you learned something from the session earlier, and we hope that you have a takeaway. Okay, so that's it actually, everyone. How about you, Lucy? Do you have any final words?
Yeah, thank you to everyone for attending, even if it's on a Monday. We
Yeah.
have a lot of
It's
attendees
Tuesday,
here.
Lucy.
Sorry, sorry, no, it's the start of the week, as
Start of
John.
the
It
week,
was
correct.
holiday yesterday. So thank you again, everyone. See you again on our next Fund in Focus.
Yes, we hope we can see you everyone in our next session. All right. Good morning, and have a great lunch, everyone. Bye.
Thank you.